Dan Stevitz here with your weekly oil and gas market update. So, another down week for WTI. I'm just hoping that, the selling's over. This has been a bunch of panic selling and, hedge funds covering their positions. That's the only explanation for this. Because I can tell you, I mean, from the beginning of, this is the first week of October, we hit about $76, and then here we are back to 50. Nothing fundamentally changed between here and there. I mean, there wasn't some, we didn't discover oil on the moon and figure out how to get it to the earth or something. So there's not this huge surplus of oil that's causing this. As you can see, this is about a year and a half, almost a 2-year chart, and we were within a pretty good trading upward moving channel here. In fact, for the last all of this year, we've been in the upper half of the channel. Everything was looking good. You're having these little pullbacks, but each high was higher, and then we get this big thing. And the explanation is the sanction waivers for some of those countries against Iran, but that really doesn't make that much sense. Anyway, I still believe the right price for WTI is 65 to 75. I'm preparing to write the newsletter, and I reread comments from Marshall Atkins over at Raymond James, and he basically says the same thing. They really haven't changed their outlook for next year, which they believe by the end of next year Brent's going to $100 a barrel. So, we'll see, but the short-term moves in prices are just hedge funds either building or closing positions. So, let's say the hedge fund panic selling is over, or should be about over by now. Each pullback then, triggers more margin covering and everything. But, at some point, nobody was selling $10, NYMEX contracts. They couldn't, so they had to be within about where we were. So you got to be about done by now. So anyway, OPEC's going to meet on December 6th, and I believe they're going to announce an agreement to cut production, hopefully by about 1.5 million barrels a day. That would then immediately, get everything back in balance. We are entering a period where heating oil demand is going to be pick up. It already is picking up, and distillate inventories in the U.S. and all of OECD inventories for distillates are way too low. One reason is you can't make as much diesel or home heating oil out of this super light shale oil, and that is going to be a problem for a while. We were counting on these heavy oils. A lot of our refiners are set up to handle these heavy oils from Venezuela, and that just keeps declining. So we have too much light oil, and as a result, not enough distillates. Refinery utilization is picking up. The maintenance season was actually much longer than normal this year because they had been running so hard and hot that they really needed to shut down and do some maintenance, and so they were just shut down a little bit longer. But refiners are the consumers of crude oil, not you and I. We don't burn crude oil in our cars, so as a refinery utilization gets back up into the mid 90%, they'll be drawing more crude out of storage, and they need to, because they need to really focus on diesel and home heating oil. There is not a glut of oil. I mean, you hear these comments. I mean, from 2 weeks ago we had 2 months ago we had a shortage. Now we have a glut. Well, that's impossible in a world that consumes 100 million barrels a day, and we're coming out of the period of the year that is the lowest point for oil demand. That is September and October. Anyway, just to prove that there's not a glut. People say, there are 1 million barrels more, or 500,000 barrels went into Cushing this week, and so there's this big glut of oil at Cushing. No, there's not. This is from the EIA website. Just Google Cushing oil inventory, and you can get to that page to see the actual. Cushing, Oklahoma is where the NYMEX contracts are settled, physically settled. And it's a huge storing location. There's these huge multi-million barrel tanks all over the place. But anyway, it can actually has enough tankage to hold 80 million barrels. It never gets there. The highest it's been is 70 million barrels, right at about 70 million barrels. And this is when we actually did kind of have a glut, and that we were getting up to the very top of their working inventory level, because there's always going to be some space available. But we're down now, as of the end of last week. We're only at about half. It's only about half full. So when you hear people say there's this glut of oil in storage, and we're not even close, we're just at half. just at Cushing. Now there's other storage locations, and as these pipelines come online for Permian, maybe this will become a problem. There'll be too many pipes coming into Cushing and not enough going out. But believe me, they know how to manage it. This is a very big and strategically located storage location, and they take care of it up there. So that's not a concern. Never was a concern, really. Another thing, they talk about these waivers, and I think the Wall Street gang misinterpreted this as, Trump's easing up on, Iran. That we've already taken about 1 million barrels of Iranian oil off market, and these will eventually. These are not a free pass to these countries that they can just get as much Iranian oil as they want to. I mean, just compare here. This is what these guys actually imported from Iran in the first quarter before Trump announced these sanction cuts. It actually went up to 2.4 million barrels a day, and then look at how quickly it's dropped. And this is what they expect in the post waiver estimates. These countries have to show that they are moving toward zero imports from Iran to keep these waivers in place. This is just not a free pass, and they end in 6 months, and it's going to be a big deal then. Let's switch over to natural gas, a much happier area to talk about. The January NYMEX contract closed on Friday at 436. December through March, we have an average price of 424, and the spot prices are going to be much higher than this. Like I said last week, the National Weather Service has now admitted they made a mistake about the El Nino winter, and they are calling for a much colder than normal winter, calling that likely now. I am now predicting we will see gas over $5 in the first quarter. After you see this storage report, you'll see why. And we're probably going to see regional shortages where the utility companies are going to be asking their customers to turn down the thermostats and go out and buy some electric space heaters or something. Last week in the New England spot market, gas was selling for $13.70 per MCF, per MMBTU already. This is in the Wednesday before Thanksgiving, and we've already got double-digit spot market prices in some of these hubs. Gas prices are set on regional markets, and there are many sub-regions within the United States. The thing is with New England, because they're so against pipelines, they don't have enough pipeline capacity, and therefore when they have a big cold spell, it really drains what little storage they have up there, little capacity they have up there. So in the spot market, the utilities have to go out and buy industrial users gas, and that's what causes this. Okay, so here's the storage report. Usually the second week of November is the last injection. It's usually a small injection. This year we had a huge draw from storage the second week. Storage declined by 134 BCF kickoff winter, and this had a lot to do with the big spike in gas prices, and I think it's going to continue. The normal draws, if we just had normal weather for the last 6 weeks of the year, we're going to end up with 2,500 BCF. Now that's just a big number, and it doesn't mean anything to most people, but remember this: the storage cannot go much below 1,000 BCF, so that would believe only 1,500. We've had weeks where there's been over 300 BCF drawn from storage. If we would have a cold January and February, there is definitely going to be some major problems in big cities like Chicago and Cleveland and Detroit, where they're not going to have enough gas in the local market, and it's going to be a big issue. So that's something to keep an eye on. Anyway, this is actually the map I wanted to show you last time, but this is the National Weather Service's current forecast, and now they're calling for February to be well below average. This is the area of the country that burns the most natural gas for space heating. If this comes to pass, and you got below average down here in the south where everyone heats with gas, this is an extremely bullish forecast for February if this comes to pass. So keep an eye on this. But here's the snow forecast for the next couple weeks through December 4th here. And we just this weekend we have a major blizzard running through this area right here all the way up into Chicago, and it's going to put a lot of snowpack down. Where this pink is will be snow-covered ground, and when you have snow cover at night, it radiates the sun's energy in the daytime, even on sunny days, and as soon as the sun goes down, you get much colder temperatures at night, and therefore more degree heating days. So this is an important map to watch. You can usually get this off the Weather Bell site, and that's where I got it. Okay, my to-do list, I'm working on the newsletter right now, and we're going to publish it on Monday morning. Okay, all of the forecast models are now up to date for all of our model portfolio companies, and I'm working now on the small cap growth company portfolios. We'll be sending those out 1 or 2 each day. And I should have them all updated pretty soon. I'm cracking the whip on the interns this week. So, and then our next luncheon is Monday, December the 10th at Chaparral Energy. This is one you really should come to if you're in the area, because this is a pure play on the stack play up in Oklahoma, and it's an area that really has tremendous well level economics. I mean, some of these wells pay out in less than a year. And it's really one of the hot areas in North America. So that's it for now. If you have any questions, please post them to the EPG forum.